Hey everybody, Matt Farnham here, leader of Team Farnham at Crown Point Realty here in Las Vegas, Nevada, Henderson area specifically. Checking in to give you a housing market update for March 2020. This is going to be a little bit different this time around, of course, with COVID-19. We're all walking through that together right now, so I want to kind of give you my perspective on what's happening out there in the housing market related to that. But first and foremost, just want to say on behalf of my family and my whole team, and their families, that we wish you and all of your family just health and safety right now. I hope everybody's doing all right. I know a lot of people have been put out of work, hopefully temporarily. But whatever it is you're walking through in this season specifically, our thoughts and prayers are with you. We are so grateful to so many of your families for how you've trusted and supported my family and our team over the last number of years. So if there's anything we can do to support you or help you or be a resource to you, please reach out. We would love to help you. And right now, I hope this goes without saying, but hopefully we're all coming from a spirit of empathy right now and just understanding. I know everybody's kind of interpreting this COVID-19 situation much different than others. Some are much more concerned than others, but regardless of where you stand, hopefully we can all just encourage and support each other right now, because that's what community is all about, right? So anyways, let's get to the housing market stuff. I'm not a doctor. I'm not going to speak to the virus, and I can't predict the future, so I can't really tell you what's going to happen. I'll just give you my take on what's going on right now and what I see, unfolding ahead of us best I can. And hopefully this will help some of you out. We've had some phone calls. I've had phone calls all across the country from clients in other markets asking me for advice, agents in other markets asking me what we're doing here. So I'll speak to some of that. But kind of getting right to it, I'll give you some quick stats looking back over the last month. So just get that out of the way real quick. The median house price right now is $316,000. So that's up 6.7% from a year ago. So it's been a great last 12 months. So we're at $316,000. The inventory is still incredibly low. I actually ran the numbers today looking at the last 30 days of sales and today's current available homes on the market without offers, so homes that you can go write an offer on right now. And we're at 1.8 months of inventory of available homes on the market, 1.8 months of inventory as of today for single family homes. So incredibly low inventory still today. Something else I'm going to mention to you, you may have not heard the term capacity constraint before, but it's kind of the term of the week here, the last month across the country. But basically what that means is lenders and appraisers and anything related to mortgages is at capacity. Interest rates have been so low this year that so many people are both purchasing, but refinancing is the big thing, that lenders are just backed up, and so are appraisers. So be patient with your lenders. If you want to look into refinancing, definitely start the conversation, get them your application in, get everything ready. I'm not saying you lock a rate today because rates are bouncing around like crazy right now, but just be ready to take advantage of that opportunity if it presents itself and rates, have a come back down really low again, and they probably will. On that note, appraisers as well. Appraisers are actually doing drive-by appraisals now. That is in large part due to the capacity that we're at, but also, of course, COVID-19. It affords them to be able to go into less homes than they have to. So a lot of refinances or loans right now, if the loan to value is less than 85%, they're allowing drive-by appraisals. So that's something unique that we're seeing right now in the market. Just to speak in depth to that, there was an anticipated $2 trillion of mortgages for this year. Specific on the refinance side, we're actually looking to be closer to 11 trillion. I was talking to my lender the other day. He shared this with me. This is based on the Mortgage Bankers Association predictions, but $11 trillion in refinances and new mortgages. So that's what happens when rates are low. Everybody wants to get in on it. So it's created kind of a backlog there. So how is COVID-19 affecting our housing market right now? First, let me just say, things are still selling, stuff is still happening, we're still moving properties. I'm not saying this to brag, but just give you a real life example. In the last 12 days for Team Farnham, we have successfully closed 14 out of 14 transactions that were supposed to close, in that time frame. Over the last few weeks, we have only lost 2 transactions. And not to downplay those, it's very unfortunate situations for sure. Thankfully, they were a little bit earlier in the transactions than those that might have been only a week or two away from closing. We did have a buyer lose a job, and unfortunately, had to cancel that purchase transaction. Hopefully, in the months ahead, we'll be able to help that buyer get back under contract and get a home they love. And then we just had one yesterday, which was a little bit further in. It was about 9 or 10 days into the transaction, but they're buying a home here in Vegas, and their California home sale was actually being purchased by Zillow. And Zillow had to cancel. They didn't have to, but they chose to hit pause, as they call it. But Zillow, Open Door, all these iBuyers across the country have stopped purchasing properties for the time being. So they pulled out of that transaction, which unfortunately led to a cancellation here because it was subject to the California home sale. So we are seeing that right now too. And listen, no judgment at all. Obviously, my opinion about selling your home to a Zillow or Open Door or somebody like that. I believe we could always get you a better outcome with a lot more net proceeds at the end of the day. But no judgment here. If you're in that situation and Zillow or Open Door or some of these iBuyers or whoever just pulled out on you, call us. At least, get some advice is free. So call me. I'd love to help. My team would love to help however we can guide you. I know you could be in a predicament right now, a tough spot if that just happened to you. So don't hesitate to reach out. Moving on, we have, I told you about those cancellations, iBuyers. We talked about that. So obviously the impact of this, is on a lot of families. There's going to be some fallout. We've already seen it. I've been tracking daily numbers of our inventory, and what I've seen for about the last 10 days in a row is if you look at new listings hitting the market, as well as back on market listings, so those fallouts, compared to how many homes are going pending each day, accepted offers going under contract, it's been about double the new listings and back on markets to the homes going pending each day for the last 10 days. So obviously that means that available homes are going to climb up and we're going to see more inventory. Couple comments to that is I do think that we saw a surge of back on markets because of, unfortunately, all those folks that have lost their jobs in the last couple weeks or few weeks. So I would expect that number to really slow down on the back on markets because hopefully the bulk of those folks that have been laid off, hopefully temporarily, but have been laid off, we've already seen them probably have to pull out of their transactions. So I don't think that's as dramatic as it looks at its surface right now, but we'll keep an eye on that and keep you posted. But inventory is probably going to climb a little bit. Buyer activity is going to slow down a little bit just as people kind of wait to see how this plays out. But I will tell you, people still need to move. You need water, food, and shelter, and people will be buying and selling real estate during this time. It's just going to look and feel a little bit different, and I'll talk about that in a moment. So, there's a lot of uncertainty on how long this thing's going to last. Everybody has their own opinion. Nobody knows for sure. I think the effects of this on the housing market will, in large part, depend on how long this plays out. I think if it's a few weeks and we're back to work and things can start getting back to normal, then it might be more just feel like a seasonal adjustment, like we just went through winter time in the real estate market. And then, the new year and spring is coming and things get real busy. One thing that's unique about real estate specifically is when you think about, COVID-19 specifically, if people aren't sitting on an airplane right now, unfortunately, those seats are lost. There's no income on those seats for that airline. But real estate's different. If you don't put your home on the market now or buy now, but you need to, that's just pent up demand. And we're going to see people transact and buy and sell real estate, whether they choose to do it now because they're comfortable, or if they're not comfortable and they choose to wait a few months or fourth quarter or whenever, it's still going to happen. So I think the housing market is quite different than some of these other businesses and areas that are affected by this. So one thing I do want to mention, though, is tragically, this is really probably compared more to like 9/11, as tragic as that is, than is compared to the 2008 recession that we saw. A lot of people want to, create fear and concern that we're heading back into a housing crash of 2008. And in a moment, I'll share with you many reasons why I don't think that's the case. But like 9/11, people didn't think they're going to get back on an airplane. Well, we got back on airplanes. I think this is going to be very similar here. It's something we didn't see coming. The real estate market was fundamentally sound. It was a strong, healthy real estate market before this came. The economy here locally in Vegas was on fire. So, wages were up, job growth was up, tech was growing, population's growing. And this was just an unforeseen thing coming into our market. And I think as it works its way out, we're going to see our market do well on the other side of it. I do think that we were heading into a recession anyways, an economic slowdown as an economy nationally. We all know that. And obviously this is just going to escort us right into that season and already has quite quickly. So again, I'm going to come back to that in a moment. So as far as why I absolutely don't think this is 2008, let me speak to that for a moment. Below this email, I'm going to provide a lot of links to you can see a link to some graphs of what I'm going to be referencing here. But here's the big difference between 2008. I'm going to mention 5 different things. The first thing is the Mortgage Credit Availability Index. So the Mortgage Bankers Association releases this Mortgage Credit Availability Index, which basically shows how easy or difficult is it to get a mortgage. And if you look at that, and you'll see the graph in the link I give you, since 2008, it has been significantly harder to get a mortgage than it was from like 2004 through 2008, leading up to the huge housing crash. So it's been way more conservative and responsible lending. I think everybody knows and sees that, than it was before the recession. Second thing to mention, prices are not soaring out of control. Prices have been wonderful. Last 5 or 7 years, we've seen incredible appreciation each year. Some years as high as 12, 13, 15, 16% year. But it still is not what it was before the housing crash. And this time around, it's been with wage growth and improving economy and other factors with conservative lending that all support that. So quite different than it was before the recession. Number 3, inventory nationwide is at 3.1 months of inventory. And here locally, we're at 1.8 months of inventory for single family homes. So very low inventory. Inventory was way higher than that before the recession. It actually had got up to about 8 months of inventory in 2008 before everything crashed. And that was nationwide. Number 4, the affordability factor is dramatically lower than it was in 2006. The affordability factor basically is based on the price of your home. It's based on wages, income, of course, and the mortgage rate. Interest rates are incredibly low right now. As far as what homes are priced at compared to what people's income is, it's a way healthier, lower affordability factor than it was back before the housing crash. And the last thing I'll mention is equity in homes. Did you know that 50% of the homes in America have at least 50% equity or more in their homes? And here's what's really staggering about that is the borrowed equity. So in 2008 or before the housing crash, everybody knows that people were buying their Mercedes and their boats and their vacations with their equity in their homes. It was easy to go get that money and to go spend it. It's not like that today. If you look at the amount of money, and you'll see the graph I'll send you, but it's going to be in that link. If you look at the amount of borrowed equity today, it's 23% of what it was before the housing crash of the Great Recession. So there's $500 billion less currently borrowed against equity today than there was back then. So people don't foreclose on homes when they have that much equity. Do they get in a position where they maybe need to sell it? Sure, and they need to cash in the equity. That's a whole lot different than a negative equity position where obviously you have less options as a homeowner in that point. So just 5 big reasons why this is not 2008. Could it be different than a 9/11 aftermath? Sure, it could be. We don't know that for sure. It depends how long this goes, but it is not 2008. Just want to share that with you. And I will remind you that as we head into an economic slowdown, the scary word is recession, but in an economic slowdown, that does not mean that housing prices have to go down. In fact, of the last 5 recessions, and I'm going to include this for you as well below, but in the last 5 recessions, home prices only went down in 2 of them. And one of them, they went down less than 2% during that slowdown. And the 5th one, it went way down. And that was the Great Recession, which the housing market caused that recession from irresponsible lending. And that's obviously unique there. So the other ones, home prices continue to go up in 3 of the 5. So that does not mean that the market has to suffer because of an economic slowdown or recession. I want to include some really helpful information for all of you. So below some links for a few things to mention. If you didn't know, but Fannie Mae, Freddie Mac, Bank of America, and others have come out and basically said that they're going to be very open to deferring mortgage payments, doing mortgage forbearance and other potential loan modifications, and just to help folks that are temporarily out of work, those few that might be permanently out of work, that they have solutions to try and help you with deferring payments on your mortgage. So there's a link for that. Also, there's a link for a Review Journal article here in Las Vegas about no evictions. Evictions for renters, for tenants have been put on hold for the time being. So at least 30 days it's been delayed, where if you can't pay your rent due to a COVID-19 situation, you cannot be evicted in that situation. So there's more information you can get on that. delayed our taxes for 90 days. So that was great. We don't have to pay taxes for, we have, April 15th got extended to July 15th. That's going to help a lot of families just, with that extra time to do that. I have a link for marketwatch.com that I'll put in there for that. And then also, Investopedia is that link. And then also the Fed funds rate, they dropped to 0. Now, keep in mind, that does not mean mortgage rates drop to 0. So don't call your lender and say, I want to refinance at 0%. That's not possible. But it is, very helpful. Basically, that's more tied to HELOCs, home equity lines of credit and credit cards. But it's going to help a lot of people just to free up some pressure there. And it will put downward pressure on mortgage rates in the days and weeks to come. So rates should be coming back down. Quantitative easing is what they refer to as, where basically the government buys mortgages to help rates stay lower on mortgages. And last week they did $100 billion purchase in one day of mortgages, and rates dropped almost 1.5 points in one day. So look at those mortgage rates. They're bouncing around like crazy. Communicate with your lender. And like I said, just make sure you're ready to take advantage of that when they get down to a number that you're super excited about. But in big picture, rates are crazy low regardless of what you lock at right now compared to what they are historically. So great time as far as that's concerned. So I want to kind of close with my message, and this is longer than normal, but obviously there's more to talk about, right? So what's my message for all of you potential home sellers and home buyers? I want to speak to you directly right now. First of all, I think the most important thing is everybody needs to do what they're comfortable with. If you are comfortable selling your home right now in this environment, sell your home. If you're comfortable buying in this market, let's buy. Let's help you get a home, and we will guide you through whatever it is you're comfortable. If you're not, there's nothing wrong with that. There's no right answer right now. If you want to sit on the sidelines for a couple weeks or months and we'll see how everything plays out, there's nothing wrong with that either. But we don't have a crystal ball. We don't know exactly what's going to happen and when, but we will guide you through whatever it is you want to do and what you're comfortable with at your pace. Just let us know, and that's what we're here for. So first of all, what are we doing as a team, Team Farnham specifically? And I think the key buzzword right now is fluid. We are very fluid day by day on how we're managing things. But just to give you kind of a glimpse into what our team looks like right now and how we're helping our clients is, first of all, we are working from home. I'm in the office right now. It's quiet here because a lot of our team's working from home. I've spent some time at home as well. So communications will be a little bit different on phone calls and emails and texts, but we're still doing everything we can to be efficient and take care of our clients at the highest level possible. We're doing a lot of Zoom meetings, Zoom video meetings or FaceTime or whatever it is that you're comfortable with. We're doing a lot of buyer consultations and listing consultations that way. Technology, thankfully, our team was already pretty adept on technology, so it's not a huge transition for us, but it is a little bit of a learning curve for some of our clients and people we're talking to, but it's very simple to learn and a great way to stay in contact and get things done. Video tours. So we're now doing more video tours of properties rather than necessarily showing homes to buyers or opening doors for buyers on our listings. I think we're going to see a lot more video tours where more of a kind of a raw, realistic walk through the property so you can see exactly what it looks and feels like to be there, to try and eliminate some of that foot traffic, at least in the coming weeks, as we need to try and have social distancing and keep our space. We're just trying to be sensitive and mindful of our current situation. We're preparing sellers and buyers, a different way of doing things. Like I just said, it's going to be a little bit different, but we're still going to get things done in a sensitive and respectful way that we need to do it right now. And we're going to keep trying to keep you updated on housing information and stats as it comes available, even financial information. If we see something that seems like it could be helpful to you, we'll post it. And hopefully it's a resource that you can use and benefit from. So specifically, message to sellers: do not give your home away. Do not panic. Slow down. I know there's a lot of fear out there in the market right now. A lot of people making very irrational decisions in times like this. Please do not do that. Don't give your home away. I just gave you a lot of information why I think the housing market's much different than other things out there. So call us. Let's talk through it. Let's make informed, careful, cautious, wise decisions. But don't give your home away right now. There is low inventory. So like I said, 1.8 months of inventory, no matter what's going out there in the marketplace, that's very little competition, and buyers do still need to buy. So just know that showings will be different. Right now, what we're doing for our occupied homes, if I'm helping you sell your home occupied, we're actually marketing the home. Everything as far as the forward-facing marketing looks the same. All the amazing photos and video and drone footage and all the stuff you guys know that we do on social and 100 other things is all the same. But when the buyer goes to see about seeing the home, they're going to call Johnny agent, and Johnny's going to see that it's no show. And then we're going to send them a link to a video where they can have a more raw walkthrough of the property. And then if they send us an offer, upon receipt of an offer, as of today, again, very fluid situation, upon receipt of an offer, we'll schedule a showing where we'll have very careful guidelines with booties and masks, if we can find it, or gloves and wipes and all these types of things, to just eliminate the looky-loo traffic, the tire kickers, if you will, through these homes. So again, it's just going to be different and a very fluid situation. And the one thing I will say to sellers right now is know that the traffic's going to be a lot different. But I think the buyers right now, in fact, traffic is down. I have a stat up on my other monitor here. This time last year, there's 63% less showings happening right now in our lockbox activity through a system called Showing Time. 63% less showings in Nevada right now than this time a year ago. And I think that just speaks to all the tire kickers aren't looking at homes. People don't want to go look at homes right now if they don't have to. But people that are serious about buying, they're still out there needing to get into homes. And we will still see transactions take place every day. For buyers, what's our message to buyers? First and foremost, find a home you love. That's the focus. Don't try and think you're going to get a huge deal right now and find some desperate situation. Don't be trying to time the market. Don't try and time the interest rate. Find a home you love. This is your home where you create memories for your family. And let's negotiate the best outcome we can for you, but make sure we get you the home you love and a great rate right now. And we will. Maybe we get you a 45 or 60-day escrow right now. And we just kind of watch the market for a couple of weeks and then lock that rate as soon as we think it's as low as it's going to get, because it is bouncing around so much right now. But find the home you love, and that is the focus. There's an old saying that says, you don't wait to buy real estate, you buy real estate and wait. This is not gambling. Don't try and time the market. Find a home you love if you're looking to buy a home, and that's the most important thing. The video showings, just know as a buyer, you're not going to be getting into all the homes like you typically would necessarily. A lot of sellers aren't comfortable showing their homes right now. So you might be relying on video until you get a contract, and then we set up an inspection type thing. So be flexible and understanding in today's environment. Some of the best rates right now, obviously that's a big benefit. Get the home you want with less competition. A couple of weeks ago, we were seeing 5, 7, 10 offers on listings. Now you might be competing with 1, 2 offers, 0 offers, 3 offers. So you have a much better chance of getting the home that you love than maybe you did a couple weeks ago because of that competition. And again, I think the most important thing is, what are you comfortable with? If you're comfortable buying or selling now, great. If you're not, wait. Whatever is right for you is right for you. And don't let anybody tell you something differently. And in closing, just a few things to mention to you. We'll continue to keep you updated best we can on the housing market. Again, everything's fluid right now. Remember your small businesses out there. They need our support right now. So support small businesses however you can, even if it's online. Use this time at home. I'm trying to use this time. I'm expecting maybe a little bit more downtime in the coming weeks. Maybe not. We'll see. But to focus on family and maybe a new perspective on family and work-life balance and business and health and things like that. So use this time, wisely. And I'm sure many of you are, but just a reminder, don't be afraid to laugh about things. We have to spread the joy. We need to push positivity as much as we can right now. It's just different being at home, I know, and feeling cooped up for a lot of us. But we need to push positivity and be an encouragement to somebody today. So hope you found value in this information. Sorry, I went 24 minutes here, but there's a lot to share. Can continue to keep you updated. Reach out to our team. We love hearing from you guys. Again, we wish you just health and safety and vitality for your family. Anything we can do for you, please reach out. We love you guys. Appreciate all the support for Team Farnham over the years, and we'll look forward to talking to you guys all soon. All right, guys. Take care. Bye-bye.